Do you intend to enroll in college? Do you want to finance your schooling without becoming bankrupt? Budgeting for college expenses may be challenging, but with the right tools, it can be made easier. In order to maximize your education without jeopardizing your financial future, we'll go over several tactics for saving and budgeting for college fees in this video. Reducing student debt. Today, reducing student loan debt is a major problem. In the US, outstanding student loan debt is estimated to be approximately $1.5 trillion. Because high levels of student debt make it difficult for borrowers to accumulate wealth, create savings for the future, and pursue further education, they have an impact on the whole economy. The high amount of student debt in the United States may be reduced using a variety of strategies. One method is to limit the quantity of student loans that are available. More grants and scholarships should be made available to students rather than loans so they may get a top-notch education without worrying about debt. Giving debtors greater alternatives for income-based repayment plans is another tactic. By helping borrowers manage their payments in accordance with their income, these programs may allow them to lower the overall cost of their student loans. Programs for debt forgiveness, reduced student loan interest rates, and deferments are further feasible strategies. Establishing a budget. One of the first steps in managing student debt is developing an efficient budget that completely accounts for the expense of attending college. Before making a budget, make a thorough accounting of all your earnings and expenses for that specific school year. Include not just the necessary expenditures, such tuition and fee payments, but also the cost of books, renting off-campus housing, and travel. Using the majority of their net income, after taxes and necessary living expenses, individuals may then create a budget. They may do this if they have a detailed list of all the costs associated with attending college. Spend a reasonable amount of money on extracurricular activities and leisure pursuits while giving your debt repayments first priority. A budget may be revised and amended annually to account for fluctuating expenditures and, if required, loan payment deadlines. Educational savings accounts and 529 college savings plans. Even without student loans, those who open or make contributions to an education savings account, ESA, and/or 529 college savings plan may still improve financially. ESAs provide tax advantages and allow parents or guardians to pre-fund a student's education by allocating a portion of their income towards the cost of tuition and school supplies. Regulations apply to ESA funding, which may include limits on total contributions and reporting specifications that may vary by resident's state of residence. The long-term savings option that is more often employed is the 529 plan. They enable the saving of tens of thousands of dollars for college or university tuition for future generations, and the fund is tax-sheltered and tax-deductible. Additional guarantees concerning the future tax sheltering of any profits and, in certain cases, plan upgrades that result in waived college expenses are provided by 529s, which are immune from the constraints imposed by ESAs. Federal student loans. Another option is to consolidate existing student debt, and there are other federal loan payment plans as well. Students may split their loan payments into smaller, more manageable monthly installments with the aid of Pell Grants and Stafford loans while still managing to pay off their debt. It is advantageous to begin the repayment costs as soon as possible since doing so lowers the amount of interest that must be paid by creating a sizable hole in the loan's principal. It pays to apply for scholarships and grants in, if applicable, post-college employment in the military since doing so may have both short and long-term financial benefits. Scholarships and grants. Prospective and current college students should apply for grants and scholarships, which, unlike loans, do not need to be repaid, in order to lower costs and keep a budget. There are many other types of unique, specialized scholarships available, from grants provided by trade organizations and business chambers to prizes based on religion or culture. There may be additional perks associated with admission to a university or college, such as the Hope Promise Fund, Pell Grants, and state-sponsored awards. Financial aid packages and tuition discounts are often made available to students enrolled in certain college courses, certification programs, or specializations. When available, clubs and volunteer activities may assist with college applications and, therefore, potential financing chances. Tax advantage savings plans. For future college expenses, using education tax advantages like Coverdell Education Savings Accounts, ESAs, is another option to consider. Overall, these accounts may be used to pay for tuition, books, and access to a school's resources in addition to one another. Savings are effectively given preferential status when it comes to taxes, and diligent savers who earn more than the minimum wage might get a return of up to $1,000 a year. Additionally available are U.S. government savings bonds, which provide a variety of low-risk investment options. Income sharing agreement and future income payments. Income sharing agreements, ISAs, which have gained popularity recently, may be used to pay off student loans. Through ISAs, a student may essentially transfer the responsibility for repaying student loans from themselves to wealthy or charitable organizations in exchange for investments in a company. In essence, the investor invests in the student's education in exchange for a share of their future profits after they hit a specified income threshold. Income payments may take the role of student loans and allow borrowers to defer certain obligations until they begin earning their own money. Family and friends donations. Although it may be tough to consider, asking family and friends for assistance with college-related expenses may turn out to be a quite simple operation. Naturally, any efforts must start with a justification for the need for assistance and an estimate of how long it would take to properly pay off any extra sums owed over time. Create a system that allows family and friends to work together on early saving via matching programs like investment accounts for college so they can really save and give if you're feeling ambitious. Undoubtedly, student loan debt may be decreased. With wise budgeting and financial literacy, a student's academic career in college and beyond may be meaningfully advanced. By adopting smart strategies, you may lower long-term debt and the potential strain it puts on your financial and personal goals. By implementing the guidance offered here, which extends from standard loan arrangements to specialized savings and payment plan options, it is possible to recover financial freedom and achieve long-term goals. This is it for today's video. What do you think of our video? Let us know in the comment section below. Don't forget to like and subscribe to our channel for more future updates. Thanks for watching.